All right, so doing my second video today. I actually had a question comment from a friend of mine that I went to high school with in the Philadelphia area. So he wrote in, he said, I'm loving your channel, loving it. Thank you for that, appreciate it. Here's a potential topic that I've been wrestling with from a philosophical perspective. I'm married with a family of four, own via mortgages 2 homes. I've been paying down the premiums fairly aggressively. I'm essentially paying someone else compounding interest if I don't do this. I'm wondering if I would be better served investing the extra money or continuing to pay down debt. This is an excellent question, and it's probably one of the most commonly asked questions in personal finance, which is, okay, aggressively paying down my mortgage to have no mortgage, and I'm doing that an extra $500 a month. Would I be better served putting that $500 a month into a Vanguard index fund or into another type of investment? So should I invest that extra money, or should I use it to pay down debt? I would say, first of all, if it's credit card debt, things that are frivolous, if you will, then I would definitely get rid of that credit card debt. That can be like 15, 18, 20%, crazy kind of percentages. So, and it's very hard to compound capital at those rates to keep up. But if it's a mortgage, I would say this. I would say it depends. And so let me preface it this way. Just like in the world, as I mentioned the other day, even within religions, you have different camps. You have the Sunni and the Shia in Islam. You have the Protestants and the Catholics in Christianity. You have different sects in Judaism. In American politics, we have the Democrats and Republicans. And then even within the Democrats, you have the more old guard centrists with the progressives. In Republicans, you have the Trump followers, and you have the more traditional Republicans, right? And so there's certain people in personal finance. So if you take like a Dave Ramsey or Susie Orman, they're generally going to encourage you to pay down debt. So if you want a car, pay for it in cash. You want a house, pay for it in cash. If you already have a mortgage on that, first thing you want to do is pay down that mortgage, then invest. Generally, that's their sort of worldview. And the counterparty to that, essentially, the contrast to that is more of a Grant Cardone, Robert Kiyosaki. One could even add Aristotle Onassis, Donald Trump, where you can build empires based on debt. Let me say that again. You could build empires based on debt. Now, someone might hear that and say, oh, but then those empires crumble because they're based on debt. It's a house of cards. Perhaps, and perhaps not. So the way I would really answer the question is, who are you? Meaning, I know who you are, of course, we went to high school together, but meaning, who are you? Like, are you trying to be a Grant Cardone, Aristotle Onassis, Forbes 400 list, with a net worth of 30, 40, 50 million? Or would you rather have kind of comfort, security, safety, more of like a middle class, upper middle class lifestyle? You have no mortgage on your home, so you own them free and clear. You have 4 kids, you said, so maybe you want to coach basketball for your sons and you want to go to ballet and dance for your girls. You have a job, you have the income from that. I don't know if your wife also has a source of income. So you have the 2 incomes, you have no mortgage, you're sitting pretty. If you're in the Philadelphia area, you're gonna go down the shore for a couple of weeks and what is that? I forget the towns. Not even like Sea Isle, Wildwood, Margate. I'm probably a little bit off on the names. Ocean City, Atlantic City, some others, right? So, but you're not gonna lead like an extravagant lifestyle, and this kind of ties in, to the video that I did earlier today, which is, the desire for wealth. Is it based on a really high lifestyle, sort of a luxury lifestyle, or is it based on peace and security and freedom? So for me, I'm trying to go for all the marbles. So meaning me personally, I'm trying to compete with Steve Schwartzman with Grant Cardone, with Robert Kiyosaki, with Warren Buffett, with Ray Dalio. The Jews have a name, they call it the Big Mocker, I think in Hebrew. I'm probably mispronouncing, of course, but that's my aim, but that's not everyone's aim. So if you're watching this, you're like, if I had $1 million or 2 million, like I'd be good. I'd be set. I'd be comfortable. No mortgage. I can go to my kids' basketball games, baseball games. Like we can go on a cruise on a week. We can go down the shore. You have a nice a car paid in full, and that's like very much the Dave Ramsey model. So I'm not hating on that. I'm not like saying, oh, that's the wrong model. That may very well be the best model for you. But if you're really trying to get rich, really, really rich, oftentimes it's generally not done through a salary alone. It's generally done from taking that salary perhaps and then buying things with it that appreciate over time, whether that's real estate, whether that's stocks, bonds, what have you. So, I mean, let's look at how banks make money. They basically take in deposits and they pay you nothing, right? They pay you 0.001% in the savings account, and they lend that to others, even maybe back to you, right? At 3%, 4%, 5%, depending on the error and the time. So the banks are creating wealth on that spread. Grant Cardone, who I mentioned in this video, who really taught me the real estate game, one of the things he said one time, and it's a really cool statement. He said, I got rich in America. And then he paused and was like, can I even say that, anymore based on the political climate? But I got rich in America on the spread. He's borrowing money from banks at 3%, 4%, buying real estate assets that are 7 caps, 6 caps, 8 caps, 9 caps, what have you, increasing rents, capital appreciation. I'm working on a deal now. Actually, it's one of the reasons my voice is hoarse is because I had the second COVID shot. The second reason is I've been on the phone all day. I'm trying to close this deal, and I'm working on a deal with the bank on a refi of a property. And on that refi, I'm going to get a check for about $500,000 tax free, which is like $1 million basically, right? I mean, I'm just approximating here. But that's leverage, that's taking on, using the appreciation, taking out a loan on that. So that's the opposite of Dave Ramsey, Susie Orman, right? That's going the other way to them. But like Kiyosaki's like, I borrow hundreds of millions of dollars, hundreds of millions, right? So it's that principle. You're borrowing money at 3%, 4%. You're trying to find, 7%, 8% cap rates. So it's that spread, just like the banks are doing. So you're basically becoming a bank, right? Except you're not taking in deposits, but it's the spread where the money's to be made. And it goes back, I mentioned, also another Greek, Aristotle Onassis. One of the things he said, the secret to getting rich is to borrow big and pay your creditors back to a penny on time. And that's leverage. That's a lot of private equity. That's a lot of hedge funds that are levered up. That can go the other way. Just have a little coffee here for the energy mid-afternoon. That can go the other way if you want to just, as you're watching this, Google long-term capital management. Google Archegos Capital that just blew up. Leverage can cut the other way as well. So the question is, again, it's really like who are you? My best guess on this situation, I'd have to really look at the numbers, but maybe you can go half and half. Let's say you're paying $1,000 a month now to pay down the debt. Maybe you can go $500 a month to paying down the debt, $500 to just vanilla indices, stock index ETFs. The question is, do you have do you have existing stock assets? So if you don't, then you're starting from zero. But if you already do, is that enough maybe just from the passage of time to compound and get you to where you need to be? So there's a lot of different nuances and individual situations that are different. But from my feeling on this is I necessarily wouldn't go crazy taking out massive leverage. If you have 4 kids and you're kind of stable where you are. But again, every situation, it is unique. So just keep that in mind. So just the final thing I'll say is another way to look at it is, instead of either paying down the mortgages or dollar cost averaging into stock market indices, is letting that capital sit and accumulate to where it's, maybe it's 20,000, 40,000, 50,000 sitting in an account. And then you buy a piece of real estate, and that piece of real estate pays for the other 2 mortgages. So, let's say you're buying a property that's 500,000, and say you can rent that property out for 3,000 a month. Say you walk away with 1,500 a month net, just 50%. I'm just these are round figures here. After taxes, insurance, repairs, maintenance, you walk away with 1,500. Say each of your other mortgages equals 1,500. Then what you've done is you've really set yourself to financial freedom. You've taken the money you've accumulated, and your assets are paying for your liabilities, which is the flow chart of the rich. So that's like this home that you see here in a very affluent neighborhood in South Florida is paid for from the rent I collect from my tenants. So my tenants are paying for this home because of the spread, because when you run the numbers, numbers have to make sense. But so anyways, I hope that is helpful. And again, I didn't really have to look at the situation, but that gives you a couple different scenarios. One is you kind of keep doing what you're doing, taking that money, paying down the mortgages. 2, setting that money aside, dollar cost averaging the low cost stock market ETFs, just a couple: VOO, which is the S&P 500, DIA, which is the Dow, QQQ, which is the NASDAQ. And then the other is letting that capital sit in a money market, just a savings account, over 6, 12, 18 months, and letting it accumulate so you have the down payment for a positive cash flow piece of real estate. So those are kind of 3 different pathways. But anyways, hope that's helpful, and hope all is well, and you're loving life, enjoying life, all those things. Take care. Ciao.